All right. What does this say? Okay. We're gonna be. Oh my gosh. The right mic is on, right? Let me check. Okay. We are going to be reviewing the market today and looking for any opportunities that we may have missed, anything we can learn, and just taking a look at what happened in general. So, yeah. And I'll be saving trades as we go, as normal. So, yeah. So, okay. I guess let's start out by just dropping down to lower time frame, really get an idea of what happened today. So, today, we basically got this Judas swing at market open down to it looks like almost I don't know what this key level was. It almost looks like, hey, what up, Danny? Good to see you, bro. Just gonna have a chill review session here. So just gonna start marking up whatever we see. I should make a folder for today. So I'm gonna go ahead and do that. I already have a folder for today. So yeah, clearly we got this Judas swing at market open. Data low. Yeah, we definitely had news. I can't remember when the news was. Let me look. Let me look actually. But I really want to see where's the missed opportunity for today because there was definitely longs. I know that 8:30 a.m. uh was the data wick. Yep, there you go. You're right. There's the data low right there. Dang, I didn't even realize that, but you were spot on. I actually kind of forgot that data low was there when I was live trading. So we go down to the data low. Yeah, you can't forget about the data low. And then, we might have had a inversion for value gap. Oh, yo, didn't Dodgy like take this? He might have. I think he might have, honestly. Dodgy might have taken it. I'm gonna take my AirPods out. The 2 minute IPG off of it, but it was too choppy, so I waited. Let me see. Oh yeah, this ended up playing out. The 30-second down to it. Yeah, I'm seeing the 30-second. Okay, so yeah, I definitely see this 2 minute long. Yeah, it was definitely choppy. I could totally see why you didn't take that. This 30-second though, I guess let's mark this out. Honestly, I'm not sure this is something that I would take because, it's just kind of not super obvious at all, but well, I like the death candle. I will admit that death candle is nice. So sometimes it's a lot about like the specific context. Like in this case, this death candle makes it very obvious that we're going to the data low, and you can know that based off of back testing. But once again, this isn't. I don't know if this is the most high probability trade for me, but hey, Dodgy liked it, so yeah. Here's accumulation, right? This whole thing's accumulation. Manipulation, and then inversion. The 30-second he took was pretty hard to see. Yeah, it's using two candles as one essentially is what it is. It's more of just honestly, if I had to guess, what he did is it's more of an intuition thing. Like he saw that death candle and then he knew that we were gonna go the data low. It was definitely his intuition at play, which is valid. But I mean, yeah, it's a harder play to see because this was a total intuitive move by him, and because he's just so used to seeing these. He was prepared for this. The other thing I liked about this AMD here is we also took true opens. That was the other thing that I really liked about this AMD is you can see that here I'll show you in just a second. Boom, there's the sweep. We had, oh, midnight's all the way over there. Okay. We had 7:30. And then we had 90-minute true open here. So that was the other reason why I liked it, because it's just obvious when you pair it with true opens that this was true manipulation. So there's the 90-minute bang. Or no, that was the true session open. And then here was 90-minute. Yeah, so that was, I guess, the first obvious trade that you could have taken. I mean, maybe not so obvious, but first trade, right? If you saw it, good job. Honestly, it was kind of hard to see. But that's all good. There you go. So, all right. Yeah, not a bad trade at all. Wow, that's awesome. What trade did you take? Heck yeah. Okay, screenshotting that. So that was at 9:34. 9:34, dodgy. I'll just put one setup for life. Inversion for value gap on the 32nd. Okay. Yeah, definitely let me know what trade you took, because I want to know. Yeah, I mean, it was very obvious why we went higher. I thought that we were going to draw towards market open lows from over here. I guess the only immediate draw on liquidity was the data low. And from here, we were ready to go higher. And we had the RTH gap. Which I knew was going to be a really good draw on liquidity, and I should have trusted that. But it's all good. One day at a time. So, bang. And it makes a lot of sense. It was seeking the data low. I didn't realize that was a data low. 11:25, 5-minute inversion. Created an SMT with ES after accumulating for like an hour. Previous day's low was my target. But got out after another SMT with ES at the low. Nice, that was smart. 5-minute inversion. 11:25. Oh yeah, it's a big death candle. That closed super low. How did you enter on that close, or did you enter on a retrace? Because that's like huge stop loss if you entered on the close. Anyway, nice job, bro. Look at the 5 minute time frame for that entire trade. Every single series of up close candles support the price to go lower. True. Dude, you're getting better and better at order flow. That's for sure. So, okay, back to the overnight gap. So, I wish I just stuck to my initial idea, but the fact we went lower, I kind of was like, well, maybe the draw on liquidity is lower because you don't want to fight the trend. It's so hard because like I knew the RTH gap was gonna be good, but also anyway, just gotta keep trying my best. But RTH gap here, we go and fill it pretty nicely. And one interesting thing is you can see every single fair value gap up to that. We're essentially spooling. The price is very one directional until we reach our draw on liquidity, which is the RTH fill. So that's a really good example of spooling taking place. And what's interesting is I really, really liked the 5 minute. Where was it? There was a 5 minute volume imbalance. I know there was. Where did it go? Maybe it was on the. Maybe it's on the 3 minute. Maybe it's on the 1 minute. What happened to it? What happened to that volume imbalance? Is it only on the 15 minute? So I remember seeing that and I was like, what the heck? What? Where'd it go? I don't understand. I was just looking at it this morning. Nah, I'm so confused now. What the heck was it on MNQ? Oh, I need to click this button probably. I don't know where the volume imbalance went. I was looking at it this morning. What the heck? Oh man, I got really tired really fast just there, if you couldn't tell. So that's why I stopped talking so much. I don't know, I'm just getting a little tired, but you know what? I'm not going to focus on making this perfect. I'm just going to back test and get this done. What the heck happened to that volume balance, dude? I There was a volume balance here. I don't understand what happened. That is strange. Whatever, it's fine. It's fine. I think we had S&T with that low, which was another big reason for the move back up. Yep. We have S&T with this low, and it occurs in this rejection block. Yeah, I think this would actually be a good Phoenix model. This is the type of trade Palatrades probably takes. Right there. Because the rejection block takes out liquidity, and then we go higher. So that's a good one. That's a good Phoenix model. Okay. I think yeah, the big long ones are the ones that Powell uses for the Phoenix. Because it's hard to go too wrong when you got a big long rejection block like this. So I might have done something like that. Send it on Discord. I ended up adding more to my position later on. Sick, dude. Alright, I'll check it out right now. And obviously you could have entered at the midpoint of that rejection block as well. Honestly, I don't really take the rejection block trades because I don't know. I have to gain conviction with trading them live. 938 Phoenix model on the 1 minute. There you go. Okay, I'm gonna look at that screenshot you sent me. But yeah, guys, I got a little tired, but you know what? We're just gonna. I'm exhausted, bro. I work 24/7. It's exhausting. All right, let's see what you sent. Jake, this is what I was talking about on your stream. Okay, let's look. Let me switch the screen. 5-minute inversion. Hey, what up, Javier? Oh, you got in up here. Fire the 5-minute. See, what I don't get is the 5-minute closes. So Danny, this is the one question I have is the 5-minute closes all the way down here. It looks like, according to my chart, it closes down here. So did you basically enter before the 5-minute had closed? You took a lower time frame one. Like, I mean, maybe you took the 2-minute. But yeah, I don't know. But that's nice, bro. That's nice. Yeah, good to see you, Javier. Right now, I'm looking at this. It's frustrating because I knew it. The RTH gap. I should just trust my instincts because I knew initially that the RTH gap would be a great draw on liquidity, and well, obviously it was. It only happened once we got SMT and formed this rejection block. Now I'm curious what other trades there were because there's always so much opportunity. I really thought that this is why I took the trade I took, guys. Just so you guys understand, like maybe I'm crazy, but the first presented for value gap usually when it gets inversed, usually it's a pretty good trade. This trade though, it was not super obvious. We get the death candle. So in my head, I'm like, all right, anyone who's long from this trade, they're going to get stopped out down here. So I'm going to take first strike lower. And then, well, I got cooked. And, I don't think the logic was terrible, but I think the idea of how I executed it was not as good. For instance, like it would be good maybe if I got a fill right here before we took out this low. Problem is we take out this low and then inverse this gap before I get an entry, which makes it not good at all. So very little niche things. Anyway, I want to kind of mark out this spooling because I find the spooling to be very, very interesting. Right, you guys, check this out. So we end up getting the bullish SMT. We take our really nice strong liquidity, which is the data low. We're below all the true opens. And then what happens? We start spooling. So you guys know what spooling is? And I'm going to probably have a video come out on it eventually. But basically what spooling is it's especially going into a macro time, but the market starts algorithmically respecting fair value gaps and displacing. So, like this, right? Boom. There's a fair value gap. This is all happening on the 15-second. There's a fair value gap. There's a fair value gap. So these are things you want to be paying attention to, especially going into the macro and like even on low time frame charts. Like, is the market respecting bullish fair value gaps and breaking highs? It's probably telling you that the market is spooling towards opposing draws and liquidity to the upside now. And so you can see that was the case here, right? And then we complete it when we get up to the RTH gap fill. And this all occurs within the macro. Well, going into the macro, right? Still pretty cool how that works essentially. This was kind of tricky, but there we go. So yeah, This is spooling. All right. Towards the new draw on liquidity, which was the RTH fill. So it's really important to pay attention to spooling because it's gonna hint at where the market's driving next. So I'm just gonna put spooling and then dot dot dot. Or no, I'll just record spooling during 950 macro. Actually, I'll just do spooling. Okay, saving it. So, what trade could we actually take? Because this is the core. This is the core of the question for today. Is like, how could I have gotten in on a trade? I really, obviously, I noted it live, and it sucks because I already took my trade. So it goes to show, if you don't see something, don't take a trade. But I really liked this. And I know we inverse to the downside here. Man, we don't have SMT with that low. Or that low. What about on YM? I would think that there would probably be SMT there. But yeah, you guys probably know what trade I'm talking about. It's the 30-second inversion to the upside to fill the RTH gap. And is there really not a SMT with that low? That's surprising, actually. So anyway, there's no SMT with that low. But this trade was nice, where we're actually delivering from the Reaper imbalance here. Maybe mark it out like that if you want. Man, we don't actually go down to that one. Okay, never mind. I guess there's not really a good one. So, 30-second. Ignore the Reaper comment because I'm not seeing a good one. I mean, well, I guess we do use this whole thing here. But we barely tap it. Anyway, my point is this inversion for value gap up to the RTH fill is a nice scalp. I like it a lot. It's a second stage distribution type of scalp, and it's fading the one that already failed. So if you see a failed IFG and then another inversion for value gap, that's even better. Usually, that's a pretty good trade. So I would go something like this, and honestly, guys, you could have a pretty tight stop loss based off of displacement, because we know with this much displacement that we need to just go up right there and then. So like that, and you could even go on the retest here. And then if I did go on the retest, I'd probably go a little wider, but actually, yeah, realistically, guys, I would not be surprised if I went for a retest entry on this. So And from now on, guys, I'm not going to record inversion for value gaps where I enter on the retest separately than inversion for value gaps where I enter on to the close, because it's the same as change state delivery. I don't record those differently based off if it's the close or retest. So I'm not going to record inversion for value gaps differently based if it's the close or retest. Yeah, I like that. Little IOFED of that Reaper gap. So 10:01 inversion for value gap on what time frame? Like I said, I really like this one, but I could not take it, unfortunately, because I was out of trades on the 32nd. 10:01 inversion for value gap on the 32nd. Okay, saving that. So, what other ways could we enter? Because it's like, I feel like that was the hardest part about today. I kind of knew. Yeah, I really like this. Unfortunately, I already took the loss where I tried to short when we failed we inversed the first position for value gap, and then we got the death candles, and then I went off the change of state off the first position for value gap, which is what I call first strike, which is actually really good, but in this case I was just offside. That's fine, but anyway, this was really nice, and it was in line with that draw on liquidity. So, okay, yeah, what other ways could you enter? I think that was the main issue with today. Like, how could we get an entry to fill the RTH gap? Because I kind of knew well, I don't know for sure if I knew, but I kind of knew that RTH gap getting filled was decent chance. So let's kind of look around and see what other entries there were. I always like to look and see if there's a first center for value gap trade. And it would be very cool if there was here. And there might have been. Maybe there wasn't. It might not be that obvious, actually, now that I'm looking at it. Yeah, I think that was the hardest part about today. And you know what? In the future, I just gotta say, like, if I don't see an obvious entry, just chill out, There was this inversion for value gap on the 15-second. I think this is a very high level trade. I would never really think to take this, but someone who's more advanced might take that, knowing that we might knowing that we're likely to we're in time-based discount because we're below all the true opens, and and all this was likely to become low resistance. So I mean that trade I think is pretty good, but I think that would be a really hard one to see, and I'll show you guys what I'm talking about. Hold on. I'll still record it though. I think it's cool to mark out, but trades like that are kind of scary. Like I like higher R trades. They're definitely possible, but I feel like they're not possible they are possible, but it's just there's a certain skill level needed. There really is. But anyway, I'm not seeing SMT. But point is, we inverse this gap. And okay, if we inverse this gap, that's kind of a red flag for bears because this is a really nice inversion. Crazy trade. If anyone took that, that'd be crazy. And then maybe go break even at this high. Or even this high. Obviously you would scale out. Like I'd actually realistically, honestly, I would not take it to fill the RTH gap. I'd realistically take it to, what is this? Market open highs. I would take it to market open highs. That is a 4R trade right there. That actually is not bad at all, actually. I think this is the most realistic way to take this. Time-based discount. And delivering from essentially this gap. That's BPR. And then I would just target market open highs. So this would be dodgy one setup for life with market open highs. This is what I'm talking about with the market open highs, right? They work just the same with dodgy one setup for life. But you'd have to understand that this is probably going to be void. Man, this is not an easy trade though. I'm not saying that it is. And yeah, you'd have to not go break even at all either. It's a challenge of its own. And until obviously, like coming across the other side of the void. $9.46 inversion for value gap on the 15-second. Actually, no, this is a one setup for life inversion for value gap on the 15-second. Using the market open high. And I'm not separating those anymore. I'm considering market open highs and data highs both one setup for life. I don't really care what anyone says. Okay, 15-second inversion. There you go, 9.46. Once again, more difficult of a trade, but okay. It's not easy, guys. Could have tried like an inversion like this on the 1 minute or the 30-second, I guess. Yeah, realistically on the 30-second, and then this would be more of like a 1-to-1 scalp. When this inverses, I like this one a lot because this one's super realistic, right? When this inverses, and you know, you can see clearly that we've obviously, shorts have been manipulated pretty nicely at this point. And then we inverse this gap. It's like, okay, this is pretty clear now that we're gonna go to market open high at least. And I would wait for the next candle. So this one. Probably a stop loss there. And that's only 1-to-1, but hey, it's I don't think it's that bad, honestly. On the 32nd. So 950, one setup for life, inversion for value gap on the 32nd. Okay. Oh no, maybe none of these trades are that obvious, in all honesty. But the one that was more obvious than all the rest, did I save it? Okay, we gotta save it because it's the best trade that there was. So this was the best trade. True opens, successfully purged. This was trade of the day actually, so we're gonna put this as trade of the day for sure. So true opens purged, and we're actually, I think we had stacked S&Ts with this low and this low. Let me check. Okay, it was with that low and that low. Yeah, so S&T here. S&T here. And beautiful outside bar, low resistance liquidity. This is my favorite trade. This is my absolute favorite trade of today, by far. This is the most realistic and best one. It's a very simple outside bar. And I saw it live, and I missed the entry just barely, and I should have just. When you miss an entry on an outside bar, a lot of time you just need to get in because outside bars, they're just the kind of trade. It's like okay to enter just barely, a little late, you'll be fine. And then yeah. All that was just low resistance. And we were delivering from what the heck? Whatever happened to it? It lost the. There used to be an event horizon there. Now there's not. It's okay. Anyway, there's the outside bar, right? Basically an engulfing candle, same thing. It's like, I don't know. I don't actually know if that's the same thing, but I'm pretty sure it is. And then we're also delivering from and the other reason you take profit right there is the end dog. So there's an end dog here. And so the end dog just lines up so nicely as your take profit. So, you know, just cover at that end dog there. Whoops. What's your ideal model? Or you just kind of combine everything and whichever setup you see you take. Bro, I just see it as tools in my toolbox because at the end of the day, I mean, it's an unpopular opinion, but I don't really care what anyone else thinks because it's very, very obvious to me. There's liquidity that exists above old highs and old lows. The entry model is just the tool. Period. Doesn't matter if it's a chain state delivery, doesn't matter if it's an inversion for value gap, doesn't matter if it's an outside bar. Entry models are just the tool. So why would I not have a ton of tools in my toolbox? I understand this is a game of liquidity. I understand this is a game of stop losses, and I'm not really gonna let anyone tell me otherwise because I've been trading long enough to kind of know better. So I have a ton of different ways I enter: chain state, inversion for value gap, outside bars, uh, and then there's like more niche things that I use as well. But yeah, but I like having a whole bunch of tools in my toolbox and then being able to execute as I see them. Yeah. This was so nice. There might have even been a lower time frame sure open. So this is what I mean by time and price getting manipulated, or time-based premium and discount levels getting manipulated, and then outside bar. That's sick. I can tell you're very studied. I agree. Drawing liquidity is most important. How you get there is up to you and what you know. Exactly. Like if I see a most textbook trade that I've backtested 100 times, I'm gonna take it, bro. I don't care if it's one type of entry or not another. It's liquidity. Yeah. Boom. There you go. That'd be if you depending on where you put your stop loss. Honestly, this would very well possibly be a 5R, and I do think this is a realistic trade. I really do. I think this is a very realistic trade. Very obvious accumulation, manipulation of low, and then distribution. Yeah, and I guess if you put stop loss there, like you probably should, but I'd probably put stop loss there, or like yeah, I don't know, something like that. I mean that's just beautiful. I guess you'd have to enter on the close. Okay, so it was only 4R, but still. So this is definitely going to be trade of the day. So I'm going to go ahead and post this as trade of the day right now because this is definitely trade of the day. $10.30 outside bar on the 1 minute. Such obvious AMD. It's like perfect. Everyone go like my tweet. SMTs are so good to catch those types of plays when price is accumulating, at least from what I've noticed so far. I know, right? They really are. They really are. Dude, I can't get over this trade. This is not hindsight. I saw this live. I actually I was this close to taking it on demo. Um I didn't really have it set up, and I hesitated for no reason, but I was this close to taking it on demo. I saw it live. It's all right. It's all right. So wow, there was a new week opening gap down here. That's not something I realized initially. Wait a second, there was a new week opening gap down here? Exactly, bro. I think doing it consistently every single day is like just posting that trade of the day every single day. It's gonna get ingrained in your head what the good trades look like. If I post trade of the day every single day for a year, I'm those trades of the day are gonna be ingrained in my head. I'm never gonna be able to forget that signature that occurs in the market with a good trade. And then, from there, it's just like it's just reflexes. Yeah, thanks, bro. Appreciate it. Yeah, I need more followers on X, bro, because I don't know. For some reason I suck at X. It's like I don't know why. I don't know what I'm doing wrong, but it's whatever. It's whatever. So yeah, we do use this new week opening gap, and I'm actually so curious. So we had S&T as well. I'm so curious if we had like a pin bar, because one of my favorite kind of trades is when we get a pin bar off of new week opening gaps. And what I call that is I call it the hand of FA, or yeah, wait, is that what I call it? Yeah, pin bar off a new day opening gap. I call it hand of FA. Oh, Dodgy follows me. Oh yeah, only because I it's complicated. Like he only follows me because he posted one time following people back if you comment in the next like 3 minutes, and then yeah, that's what happened. That was really the only thing that was the only reason he followed me. Otherwise, he would not be following me. Let's be so fair. He probably wouldn't. I don't know. Maybe he would. Okay, we were below 730. Man, I'm so curious. Was there a pin bar on like the 32nd? If so, this is just a fantastic trade in all aspects. There might have been. Hmm. It is interesting though the way the market interacts with new week opening gaps. Like you can't deny it, bro. Like this is so precise. So I don't know if this is considered a pin bar or not, but it might be precision swing point. Let me see. No, it's not. It's just a random. It's a random thing. I feel like there's no. Is there no pin bar off of it? What about this pin bar? Wait, actually, wait, what about that pin bar? That one might be the one. Let me actually go look and see. What I'm looking for is I'm looking for a different colored pin bar on S&P than NASDAQ. It's called a precision swing point. No, bro. I don't. Okay. Anyway. I don't know. I don't think there's an obvious trade there for a pin bar. That sucks. So, yeah, I mean, if I'm having to look this hard, it's not there, probably. But we do interact with this new week opening gap so well. We use this down close candle. I'm surprised. I feel like there should be something here. Like I can tell like we interacted with it so well. So what am I missing? I don't know. If I don't see an obvious thing, then I'm chilling. This was tricky. This one was tricky. This inversion. It kind of, I kind of thought it was good in the moment, um, but I guess you shouldn't go against the, if we have a low resistance liquidity run, and we're running low resistance liquidity, and we haven't hit the draw on liquidity, which is the RTH gap, you probably shouldn't short. That's probably the lesson there is, we had not filled the RTH gap. We were in a low resistance liquidity run, so it's probably not a good time to short. That's kind of the lesson that I see there. And then we also had an inversion on the 1 minute. That one was also good. Yeah, I definitely think trade of the day was this outside bar. And then here, by this time, it's afternoon. I mean, there might have been more opportunities, but man, I love how the market interacts with new day opening gaps. It's so cool. Oh, and there was a new day opening gap down there too. Wow, that's cool. Oh man, I wonder if there was a 2022 model that was aligned with time and price. Like I'm thinking like, okay, 951 is the true open, right? Yeah, so this is something you might want to take note of, but like 951, what happens? Hit a fair value gap, manipulate all the true opens, and then expand. Oh my gosh. It's Dominic. What up, Dominic? Dude, my brain's kind of, I don't even know what else to look at. We've kind of like, we've really gotten a lot out of price action. I've really looked at this chart up and down today. I feel like we've gotten a lot out of it. I don't know what what other entries there would have even been. What other entries would there even been? Like, yeah, the most basic one was just the inversion for value gap to the upside. It's probably what you had to do. Hey, we like that. We like that. Mm, your entry at 950. Oh yeah, yeah. Let's look at the entry at 950 that Javier got. How did you get it, Javier? Anyway, 950. Oh, at 950. Yeah, you got in shorts at 950 and you targeted. Yeah, bro, this was crazy. So, oh my gosh, and I never talked about this yet, but guys, you guys remember how on stream I said if we come to market open lows over here, this is probably going to be a soup or it has a very good chance of being a soup? I said that on stream and look, it was a soup. You want to know why? Because it's true week open with a really nice draw on liquidity. Look. Oh, wow, actually we never took it. Oh, never mind, bro. Okay. Either way, I did say that that was probably going to be a soup. Yeah, so your entry at 950 to the lows that open. Yeah, I don't know how you did that, Javier. How did you do that? Oh, you know what there probably was actually. This is gonna be interesting. I know what to look at. So Javier, if you, I don't know how you caught the short, but I'm gonna look at something else that I like, which is well, I guess we don't really use it that well. I was gonna say a change state delivery off this new day opening gap, but we don't really use it that well. Bro, maybe my brain is just fried right now. That might be. That might be. Hey, wait a sec. Goldbach was used actually pretty nicely here. That's kind of cool. Okay. I don't know what else to look at. I'm supposed to make a market recap, but I really don't feel like I have enough information to make a market recap today. Man, this was a chop fest. What is this high? Yeah, I think today was a harder day, guys. In all honesty. Ooh, we had relatively equal highs. Oh, no wonder. No wonder that was a soup. Wait a second. Wait, this is this is Vol model, bro. This is Vol model. You guys remember when I talked about how if it's high resistant liquidity and we got equal highs and we soup above all the true opens, especially at market open, it was 4-hour inside bar and I got it at the 50%. I'll send a screenshot. Okay, wait. 4-hour inside bar. I'm taking inside bars seriously now. I really want to take inside bars seriously because y'all are cooking with inside bars and I don't get them. That's the one thing I don't get still is inside bars. 4-hour inside bar at the 50%. Yeah, y'all are cooking with inside bars and I gotta get on that, bro. I'm slacking when it comes to inside bars. 4-hour inside. Okay, let me see if I can find it. This? I think it's this. So maybe just put a gradient on the inside bar like this. And then we go in the low time frame. And how do you use gradients? I know ICT talks about it all the time in the 2022 mentorship. I mean the 2025 mentorship. And the 2026 one. But I still don't know how to use gradients, in all honesty. Okay, I'm going on low time frame. So anytime you have like a really obvious inside bar, you want to keep track of the quadrants for a long time. I think anytime you have an obvious inside bar like this, you want to keep track of the quadrants for a very long time. But I could be wrong. Let's see. Well, we obviously reacted off the midpoint of it. You can see the market interact with these levels. It obviously is. Okay, yeah, I'll go look at it. Guys, I need to get better at inside bars and also putting gradients on candles because I know that they're powerful stuff and I still don't really understand them. So, and I don't even know how to really use them, to be honest. Okay. I'm going to look. So, the tweet you retweeted, did you follow me? I'll follow you back. Okay. We're looking at the tweet that Danny retweeted. ICT reveals when not to trade on Friday. TJF, the market makers do not want you to see this before tomorrow, but not worry. I've appeased them with some. Okay, let's just watch it.
Normal weekly ranges have been. And anybody looking at weekly, if it were to do a 20% retracement on a Thursday, when do I avoid trading Friday? When it does that. I don't care what the market does on Friday in that instance. Then, if I have a big weekly range, the candle's been rather elongated and it's larger than the normal weekly ranges have been. And anybody looking at the last 2 weeks, they can say that they are rather large weekly candles. If that's true, and then on Thursday, before Thursday's close, we had at any time a 20% of that weekly range retrace, I will not trade on a Friday because you'll get this type of day here. Whereas we did get the 20% retracement here. Because we got that, this is for your notes. When you have that, it tends to create these types of days or sessions. And because it's Friday and it did it in the morning session of Friday, that means after that 20% retracement, then the market can become very fickle. It means that it's back and forth, back and forth, back and forth, and it becomes very problematic to see a very easy sustained price run or a large number of opportunities intraday. Whereas a day that's not like this and not one-sided like yesterday.
Here's my opinion, right? Whatever the case may be, whether tomorrow ends up being like the price action he's showing or not, in my opinion, this is just what I think. It's just different types of price action. It's just different types of price action. As long as, in my opinion, as long as you go into a day with understanding that this is the way that price actions are going to move in mind, like as long as you understand that, like, okay, I'm not going to expect expansion. Okay, then you're good, bro. Like in my opinion, it's just understanding the conditions. It's still respecting smart money concepts. It's just moving differently based off of the kind of day that it is. So he might not want to trade it, but he might be just saying that just because it's hard to trade for if you're trying to get in on expansion. But you could probably scalp in this, like low time frames. That's just my opinion. Bro, tomorrow we dumping. I can tell you that. Maybe 300 points. That's crazy. And also the other thing is I just show up every day. Because here's the thing. If you just listen to everyone tell you what days are good and what days are bad, you're never going to get anywhere because you're just listening to other people when in reality you just got to, just show up every day. And then when you get on the chart, determine is it good or not. You can figure that out when you get on the chart. But I show up every day. That's just my own 2 cents. Okay. So I don't really understand how, Javier, you got that level.
Where you can trade both.
But I will go look at your DM right now. So 4-hour inside bar. Yeah, so that's the same inside bar I have marked out, right? I think it's the same inside bar I have marked out. Bro, I don't even know, but your levels are different than my levels. I don't know. And your chart's different than my chart. I don't even know what I'm looking at. This isn't even the same chart. Bro, I don't see... Let me go to the 4-hour. Let me just go to the 4-hour real quick. Okay, so is this the same inside bar? Because my chart doesn't even look like yours. My chart doesn't look like yours, really. You see what I'm saying? Like I can't even find the inside bar that you marked out. Okay, I kind of see it. Wait. This thing? Oh, wait, let me scroll down. It was the 14 o'clock candle. Oh. So, right here. Why do you consider this an inside bar? Right here. I'm just curious because I don't know how come it's an inside bar if we don't trade inside of it. We sweep out one side of it here. See what I mean though? My chart looks different than yours, I think. I don't know. This is the type of stuff that really confuses me. I don't know. Is this right? Why does my chart look different? Do you, I can see us using it. We obviously used it here. Bro, how do you know? Why do you consider this an inside bar if we sweep out the low and then we start? Isn't an inside bar when you get a giant candle and then you trade inside of it for like 5 candles? So because we swept out the low within one candle, doesn't that make this invalidated as an inside bar? A sweep, it's just a sweep. That a sweep. If it closes out of it, then that inside bar is not valid as long as price closed back in the range is still good. Okay, so it's still an inside bar as long as it closes back within the range. Oh. Oh. So as long as price closes back within the range of an inside bar, it's still an inside bar. So this is an inside bar because we had one, two, three-ish candles within the range. Now the only thing I'm wondering is why does your chart still look different than mine? Because I still do not see that the what you're seeing, right? You're showing how we reacted off of. Um, NQH 26. Yeah, cause you're looking at that, and oh, I see it. Wait, I see it. Oh, wait, never mind. I see it, Javier. You're looking at the this inside bar here. Wait, this. Oh. I see it. I see it. I see it. I see it. I found it. I found it. So so because we only swept out the high, but the bodies are still trading with inside of the inside bar, this means this is still an inside bar. Is that right? See, one, two, three, four. We're closing back. We're closing within the inside bar, so that makes it an inside bar, right? I think I get it, bro. I get it. Thanks, Javier. You're the best, bro. You, Javier, you are the best. Genuinely. Oh my gosh. Look at that. We have a wide range bar, and then we're trading with inside of it. Even though we sweep outside of it just barely, it's still trading inside of it for the most part because of the bodies. This is how you would trade the sweep. How do you trade the sweep though? Because you basically anticipate it to probably be a sweep because it's an inside bar, and we've been trading inside of it. I see it. There you go. There's the. How did you know that that was gonna be where we were gonna reject though? Like, how do you know that specific line is a great spot for us to reject? I see it though. I do see it. Check DM. All right. Yeah, you're trading the sweep. I think I get it. You basically limit order ready when price goes out of the range for shorts. On the circle. Honestly, this part's kind of confusing, but I think I get it. You put a limit order on the edge of the outside bar, anticipating it to, or the edge of the inside bar, anticipating it to be a sweep. It's a little confusing for me, but it's okay. Okay, that makes sense. You basically trade. You anticipate it to be a sweep, and then you trade it, on the ride down. That makes sense. That's cool. It's very cool. Okay, well, I learned something new today. Do I keep backtesting? I probably need to go to bed, and I want to film the market recap. I want to just do it every day. So I'll probably do that. But once again, why did the volume imbalance from the 5-minute chart disappear? Where did it go? Because I am 950 would be like an order block, no? Yeah, so like if I go to the, yeah, exactly, 950, it's totally an order block because you have up close candles, a series of up close candles, and then these up close candles come before the move lower. I would honestly consider this more of a breaker because I guess it depends what time frame. If you look at it on the 2 hour, it's an order block. If you look at it on like the 15-minute, it's a breaker block. Oh, on the leg down. Oh, this? Oh, this? Yeah, this is an order block too. It's like a different kind of order block, but yeah, that is an order block. That is move up before a leg down. Yeah. Sweet. Okay. Yeah, I might end the stream, make the market recap, and then be done. I am just so confused because what I thought that there was a 5-minute volume imbalance, and so whatever happened to it? Because I remember seeing it. Maybe my chart was just broken. I don't know. Maybe my chart was just broken. That is kind of weird. Alright, I'm going to film the market recap. Alright. Thank you guys so much for watching. I'll see you guys in the next one. Peace out.